What's up, Facebook? Ty Crandall with Credit Suite here. And today we're diving into SBA loans. Actually, we're going to be talking about the ins and outs of SBA loans, what you should know that you might not know. We're going to talk about the different kinds of SBA loans that exist. And we're also going to be talking about exactly what you need to do to get approved. So we're doing a lot of SBA loans right now. I literally just got one approval for $325,000 for an SBA loan. And we just did another one. We had another client get one for $350,000 shortly thereafter. Okay, as a matter of fact, here, let me see if we can flip this around. So you can see here's one of these SBA loan approvals right here, which is pretty cool for about $325,000. So how do you get these things? Well, it really comes down to knowing exactly how to qualify and meeting the criteria. And then it also comes down to knowing how SBA loans work, the different types of loans, what you're using them for, what the requirements are. We're going to go ahead and decode all this today. Why are SBA loans awesome? For two reasons. The rates are fairly low, about 8% on average right now, and the terms are really long, about 10 years. And that's why it matters, because when so many people look for financing, they're looking for low rates. Michael, thanks for coming in. Everybody's looking for low rates on financing, but the reality is the interest rates you get is based on what your risk is. What matters most when it comes to financing is term. The longer the term that you have, the lower the payments will be. So for example, I just showed you an approval for about $317,000 is the net loan amount. For that loan amount, the payment's only $3,900 a month. Now, to give you an idea of a comparison, at one point, we had borrowed $75,000 on a merchant or a revenue lending loan, and the payment was over $9,000 a month. So think about that, $75,000 revenue lending loan for a payment of $9,000 versus a $317,000 loan with a payment of only $3,900. It's possible because of term. And whenever you're looking for financing, you want a line of credit or the longest term financing you can get. SBA loans, like this one I just showed you, are giving you 10-year terms. So because the term is so long, the payments are so low. So how do we get into these? Well, that's exactly what we're going to be talking about today. The remarkable truth of SBA loans, so you know everything there is to know. So first, let's talk about how these loans work. SBA basically is setting guidelines. They're not lending the money, okay? So you need to know that. A lot of people think SBA loans money. They don't. What SBA does is they function as a guarantor. So they guarantor that in case you default, they pay a percentage of the money, usually up to 90%. That means if you're given a $100,000 loan, you default on the loan, SBA would cover $90,000. They would give $90,000 to the bank that you defaulted on. The bank would only be liable for 10 grand. So because the bank is so not liable for very much because SBA guarantees it, it opens the door for SBA to offer these kind of loans. Heather, thanks for coming in. Greetings, Pamela. Keith, my buddy. Keith Knapp is my boy. And if you need any marketing done, you got to talk to this guy. He's a genius. Okay, so they're setting the guidelines. They're not lending the money. So a bank is lending the money and SBA is guaranteeing it. Okay, they're just simply guaranteeing the loan. Now, as we talked about, you're getting better rates, but what makes these loans work is that you're getting better terms. You're getting longer terms, okay? Now, again, real estate investing, things like this are going to be a little bit of high risk, but again, don't want to give up on that because it's high risk. We are securing an SBA loan right now. One of my friends owns a credit repair company, just got one. One of my other friends owns a credit repair company, just got one. Credit repair, okay? And we're in business credit. These are financial services. This is high risk industries. So just because you're in a high risk industry does not mean the SBA is out of the question. Okay, there's 3 examples of people all in financial services that are still able to get SBA loans. So some industries like real estate investing might not be accepted, but a lot of other high risk industries still may be. Jeffrey, thanks for coming in. And Shelly, thanks for coming in. Kyle, what's up? Jackie, hello. Karen, hello. And Michael, hello. Thanks for the comments, guys. Thanks for the likes. Thanks for the loves. Thanks for the shares. If you don't mind, type it in. Tell everybody where you're from so we all know where everybody is joining us from today. Okay, so you've got to meet size requirements that they're going to have, okay? And again, you need to really kind of be small. You're not looking for usually really large businesses here, but you got to be for profit. You can't be a nonprofit to be able to do this. And again, you've got to also be a business in the United States as well, okay? So you can get loans to, this is what's called a 7A loan. So let's talk, I don't know what I'm going over here for. Okay, so real estate investing, a little bit high risk, okay? Lots of paperwork. Now, I always use that this was the case, but really SBA loans aren't that bad. They're asking for tax returns, they're asking for financials, they're asking for credit reports. They're going to do a deep dive, but the documentation isn't that bad. They're just going to want a lot of your actual financial and your credit data. Okay, that's what they're looking for. Okay, so now they offer cap lines, which is what they call their loan or their credit lines. They have loan programs, usually for real estate and general working capital. Then they also have an SBA Express, which you don't see a lot, but it's a faster way to get these done as well. So a lot of different programs. Now we're going to talk a little bit about how all of these programs work, but let's talk a little bit more about credit scores that they're going to care about. So one of the things you need to know about with SBA that you don't typically need to know about elsewhere is something called the SBSS, okay? So the SBSS is basically FICO's business scoring or FICO's business credit score. Okay, of course, the chance of you paying your bills timely. Now this score ranges from 0 to 300. Higher scores mean lower risk. So like most credit, you want to get a higher score, okay? Now, what this is doing is taking into account your personal credit, your business credit, and your financial data. 160 is typically the cutoff with SBA, okay, but usually the lender's not even going to submit the application if it's under 1. So let's talk a little bit more about this. So we got California, we got Kansas City, we got Illinois, we got everybody in there. Will the live feed transcript be available after live feed? Yes, it will. It'll be on our Facebook page, facebook.com/credit suite. So let's talk about FICO SBSS. FICO's SBSS score is only really cared about when you're getting an SBA loan. And here's how SBSS works. Thanks for the likes and thanks for the loves. SBSS takes into account business and consumer credit into one place. The lender decides what scores they want to take precedent. It usually goes like this. Dun & Bradstreet report and score comes in and tallies into the score first, Experian second, Equifax third, then they bring personal data in. Lesson number 1. This is why you have to have business credit. With FICO SBSS, if you don't have established business credit, they're defaulting to your consumer credit score. The problem with that is that you cannot, it's impossible to have a 140 score that you need to get your SBA loan submitted unless you have established business credit. It's impossible. So you have to build business credit to even have enough to get an acceptable SBS score of 140 or higher, which the bank won't even touch you unless you have that. So you need to make sure that you're working on improving consumer credit, you're establishing business credit, because that's going to tie into SBSS. If you're paying your bills as agreed and establishing business credit, even if you have some consumer credit issues, that'll offset with SBSS. Okay, so it makes a bunch of sense. Okay, let me make sure nobody asking any questions I haven't missed. Is the same as Dunn's score? No. The SBSS is not the same as Dunn's. It's completely different. The Dunn's number is a number that Dun & Bradstreet just simply uses to identify your business in their database. The SBSS is an actual credit score that's used to depict your risk of going late, that's offered by FICO, that you're mostly only ever going to see at this point in time when you're dealing with SBA loans. And by the way, you need to have an SBA loan, or you need to have the FICO SBSS score high enough to get any kind of SBA loan, because they require it. SBA now requires that this score be the 160 or higher. So again, banks won't even usually submit it if it's 140. Okay, so loans, you got to have time in business. You're going to have to be in business at least 2 years. This is what TIB means. Probably 3 years. A lot of cases, the lenders are going to want to see 3 years worth of tax returns. Now, 7A is the most popular, and it's used for what term we call working capital. Now, what working capital simply means is it means you can use the money for any purposes. Okay, now there is a guy jumping around on my screen with hearts. That is the coolest thing. Whoever just put that up there, Mark, I love it. Thank you so much. So 7A is the most popular, and it's basically for general purposes. Okay, approvals up to $750,000. You can get approvals up to $5 million with a lot of these. Rates of often 2 to 4% above prime. Whatever the prime rate is, it's about 8%. Is what you need to know. Owners with 20% or more must provide a personal guarantee. Okay, and you've got to have good consumer credit. What they're looking for is that they're not going to approve you if you've got a bunch of credit issues. The consumer credit, as a matter of fact, we've seen a 780 FICO score get denied with the SBA because of one derogatory, because the derogatory was on a major account, major bank account, a Bank of America account. If that one derog was on a medical, it wouldn't have mattered. So do you have a couple medical things? No big deal. You start going late on major credit points, you have a problem. Other thing that we've learned, they really look heavily at Lexisnexis data. If you haven't pulled your Lexisnexis credit report, you need to pull your business credit report with Lexisnexis. You can go to our YouTube channel, you can go to our Facebook, you can search Lexisnexis. We teach you how to do this. this. They pull Lexisnexis data. If you've never pulled Lexisnexis, you need to get Lexisnexis. It is insane what is on your Lexisnexis credit report. It is absolutely crazy of how much is on these. Here, I'll show you. You want to see mine? I'll show you my Lexisnexis credit report to tell you why you should have your own. This is my Lexisnexis credit report. This is it. Check this out. Watch this. Check this out. This is the whole report right here. Lexisnexis, look how big that thing is, okay? To give you an idea of size here, look how big this report is. It's 260 pages is my credit report with Lexisnexis. Lexisnexis has everything about you that you don't know that is even being tracked. It has every email address you've ever had. It has every phone number you've ever had. It has every name you've ever had. It has every license you've ever had. My mortgage license, my pilot's license, been married, been divorced, it's all on there. All your speeding tickets, all your traffic tickets, any convictions you've ever had, any of this stuff. All of your houses you've ever owned, the building materials of your home. My Lexisnexis credit report says what my home is built with, my air conditioning unit, how many stories it is, how many garages I have with every home I've ever owned, okay? So there is so much data in here you don't know about. You need to get this because we see people with judgments in here in these Lexisnexis reports that are not actually on the regular credit reports and they're required to be paid off. So get your Lexisnexis credit report, especially if you're applying for an Sba loan. See if I have any questions here. Hello, you're currently helping me closing them, purchasing. Awesome. Where can we start building business credit? CreditSuite.com/EIN. CreditSuite.com/EIN is the blueprint, Michael, for building business credit. Signed up for your Advantage Program 2 weeks ago. I'm confused. All you have to do is get back with us. Just email us info@creditsuite.com and we'll help you. But all you have to do is just add, you can add your utility accounts to your business credit reports at creditsuite.com/monitoring. Ken, just email us info@creditsuite.com and we will help you with this. Pamela says she got hers 180 pages. I crushed you with 260. Who else could beat Pamela and I? 180 pages of hers, 180, 260 to mine. That's how much is on there. Can you dispute info? Yes, you can dispute information on LexisNexis. You have to write in the process. I will do another training video on that. Okay, so we talked about the loans. Let's take a look at these. Loan 7A, you've got to demonstrate, okay, the need for the loan, what you're going to use the money for, okay? You've got to have a sound business purpose. You've got to meet size requirements, okay, which I'm not sure what these size standards are, but you can't be a 1 to 5 per employee business typically to get approved. Be small in your industry, but be a for-profit, okay, also as well. And again, what they're going to do with the 7A is they're basically going to come in and take anything as collateral. So here is how a 7A works. They're basically going to they're looking for the equivalent in collateral as what you're borrowing. So if you're borrowing 300, they want 300 in collateral. Now what they typically look at as assets, number one asset with SBA are account receivables. So if your customers pay you on terms, that can work. Now in a lot of SBA loans, if you have receivables where your customers are paying payments, there's no collateral requirements, no home, no other personal assets, just your business assets, if your business assets can cover that debt, okay? So what it comes down to is you're typically going to need collateral, and that's typically going to come in the form of account receivables or any other asset that you may have, okay? And Mark says, how about past utilities? What creditsuite.com/monitoring allows you to do is to take your utilities you already have and add them to your business credit reports. When you do that, your history will show on your business credit reports. So hopefully that answers your question, Mark. Mike says, I have a 680, was told I could not get your high limit personal card by your business with AUs. That's correct. Because the whole thing about unsecured business financing, the entire approval is based on credit history and credit history alone, which means you have to have a history of revolving accounts for the lender to look at to even be able to approve you. If what you're saying is, I don't really have high limit revolving accounts, all the ones are just authorized users, well, then you have that problem. You're not going to get approved. You need to get more primary accounts in your name. They won't use authorized user accounts to actually approve you. And just so you need to know, as embarrassing as this is, I have exactly the same problem. I don't use my personal credit for business inquiry or for personal inquiries. I only use it for the business. So I've always let my wife get the credit cards. We've always had her get credit cards in her name. Her credit card limits are like 30,000, 50,000. Mine are like 5 or 10 because I have all AU accounts, not primary. So what you're describing is very common. You have to have those as primary accounts for that to work. How does 1 to 5 get SBA loan? I'm not exactly sure what that question is, Pamela, but type it in more. or type it in again, and I will let you know. Okay, so loans to $5 million with a 7A, fixed variable rate. So again, what we're looking for here is that you're basically looking to either refinance existing debt, get machinery, get furniture. Again, this is for general purposes, so for whatever you're going to need it for. Now, these are flexible long-term loans, okay? So with this, you're able to get loan terms up to about 10 to 30 years. 10 years is pretty common. Okay, which makes it really nice for you to be able to do. Now, we've talked about SBA cap lines as well. These are up to $5 million. Same qualification requirements. So let's talk about qualification while we're on this topic. When we're talking about qualifications, what does it really take to get qualified for an SBA loan? Well, all three of the C's, as I've mentioned. So you've got to have good personal credit. You have to have good business credit. Those two combined will give you a good FICO SBSS score. So that gives you a good overall score that they look at to be able to approve you. That's credit. You've got to have cash flow. You've got to have tax returns for about 2 to 3 years. The tax returns should be increasing in revenue, increasing in profits. They're going to ask you for bank statements as well. They're going to ask you for projected financials. All of what they're looking for is your business growing? If your business is growing, what you're making in revenue, what you're making in profit is increasing, that's what they're looking for, okay? So primarily revenue. They want to verify bank statements. They want to make sure that you're managing your bank account responsibly. They want to make sure with your revenue that you've got the revenue coming in, that it's increasing. The third is collateral. Now, as I talked about, if you're accepting payments from your customers, which you should, then that is account receivables. In our world, we have a ton of account receivables. So we're able to use that to collateralize the debt. Receivables is the #1 form of collateral for SBA loan. It's the most common. If you don't have receivables, they can go after any other business asset to attach, or they can go after personal assets if not. Meaning, let's say you don't have a bunch of business assets. Then what's probably going to require is they're going to require that you actually get your home as the collateral. So their requirements say take every asset the business has as collateral, and they're going to put a UCC file. They're going to put a blanket lien against those assets while the loan is outstanding. And the second thing the requirement says, if there's not enough business assets, take the personal assets. So that means you've got to have collateral. You got to have the good credit. You got to have the collateral of some sort, or they'll use the house as collateral, and you've got to have the cash flow verifiable per those tax returns. That's what really matters. And Brian says, can loans be given for real estate companies and CSN move? We found that real estate investors are hard to get financing for with SBA. It's probably pretty tough. We have not found a niche that can do that. Not to say it can't be done. Okay, working with your company on 2 different forms, building business credit, unsecured financing. Which trusted credit repair company would recommend? Ask our team. And actually, you know what? If somebody's here that's in credit repair, go ahead and type in your information. We work with a ton of our clients as credit repair, so I don't usually shout out a specific name on Livestream because it's not fair to all of our clients that are in that industry. I hope you understand. If you give our team a call, they all kind of have their own contacts that they tend to be able to refer you to. So 877-600-2487, and we can help you with that. 877-600-2487. Thank you for the likes. Thank you for the loves. Thank you for the comments. It helps us get this out to more people. Okay, so SBA cap line, same qualifications. These can be a loan, or you can get them a credit line, which is kind of the definition of what they're doing here. They have some that are used for seasonal businesses if you have slow times and busy times. So, for example, if you are in a state where the beach is popular in the summer but not in the winter, or you ski slopes are popular in the winter and not in the summer, that's a seasonal. You can get contract SBA credit lines. This is for direct labor material cost. Basically has to do with contractors. You can get a builder's cap line. This is for the construction industry. Or you can get what's a standard or small asset-based credit line as well, which really has to do if you're accepting short-term terms with customers. So if you're letting your customers pay you on terms, these two credit lines, standard and the small, work really well. So those are cap lines, and that's 7A. That's their most popular. Those are the credit lines. Now, SBA Express, it's just a little bit faster. Rates are the same, a little bit faster to be able to get done. Okay, if you're pretty well qualified, they may just zoom you through here pretty quick. Okay, loans start at $25,000 or higher. And here's a look at some of those things that you're going to need. Income statement, balance sheet, proof of collateral, which is ARs, account receivables, articles of incorporation, business licenses. They're going to want any third-party agreements like your lease or any other affiliate agreements type of things that you have. So, and then Debbie says, will SBA give funds for rehab of historical property? Yeah, they'll give refunds for a lot of things. And if they won't, then go with SBA 7A. Look, here's how SBA loans typically work. There's 3 that you need to know about. SBA 7A. It's working capital. Anytime you hear the term working capital in lending, it just means you choose what you want to use the money for. It's general purpose. You could basically decide what you want to use the money for. The second are called cap lines. These are typically your credit lines, as I just went through for you. These aren't loans. These are credit lines, although you can get them as loans. And the third I'm about to show you is called 504. 504 is for real estate financing. SBA Express, SBA has microloans. There's a few others, but those are the main ones. Cap lines, 7A, 504. 7A, if they won't give you a 504 for real estate, get a 7A. It's for general purposes. That may actually work better for you. Michael says, can I still get 5 to 10,000 each card, preferably Chase Freedom, with AUs to build up my primary accounts? You can't get any financing if all your revolving credit is through AUs on unsecured business financing. What you can do is use a guarantor or get more primary accounts. Once you've had those primary accounts for 6 months, you'll be okay. But you can ask our team. I don't know how many accounts you have open now. You cannot get unsecured business financing without having usually 1 to 2 major revolving credit cards on your business or on your personal credit reports, and or a car or mortgage. So hopefully that helps you. Our team can help tell you exactly what you can get. I don't know the specifics to answer that question right now. So 504, second most popular loan SBA has, okay, often for equipment typically or real estate of some sort, okay? Now, this is banks basically funding the loan. Again, SBA is just the guarantor, right? Okay, you could typically get up to about 65% financing we've seen here to 1 million. Again, you know that your loan to value is going to change a little bit here depending on how much you're borrowing. You got to be a for-profit company. You have to have a feasible business plan. Your business plan needs to show you have enough money to cover this actual debt. Okay, you've got to be in the United States as well. Okay, so that makes a difference. So when it comes to these kind of 504 loans, here's what we need to know. 504 loans really have to do with the purchase or refinance of real estate. What we found right now, and what we're doing for a lot of people, is we're refinancing. So what they're doing is this. They're leasing, they're renting, they're leasing, right? What we're helping them do is go to the landlord and buy the property instead of lease it, no money down, and they're typically able to keep their payments about the same as the lease. That's where 504s are becoming very popular. Yes, you can use them to purchase real estate. Yes, you can use them to refinance real estate, but they're becoming very popular that we're seeing to take people that are already in a lease, get them to buy the property. Now they own it instead of leasing it and keeping their payments almost the same with no money down. That's awesome. That's one of the many ways that SBA 504 loans are working really, really well right now. So let's look at SBA microloans. These are short-term loans, okay, up to about $50,000, can work even for newer businesses. Okay, the average loan amount's about $13,000 with these. Okay, we find most small businesses that are just starting are only wanting about 10, so that works pretty well. Now the funds are coming basically through intermediaries is how that actually works. They're the ones that are lending to eligible borrower. Okay, so for $35,000 for working capital, this is what you're going to do. Okay, there's a couple different options here, but again, unlike with 7A where the money's coming from the bank, it's got to be repaid. This is really coming from these intermediators and SBA themselves that's actually doing that. So what does it matter? Well, here's the deal. Here's why SBA loans get a bad rap. You got to double qualify. So if you think about it, you got to qualify with SBA because they're guaranteeing the loan. You got to qualify for the bank because they're the one issuing the loan, which means you have to meet the bank and SBA's hard for you to get these loans. Because SBA, you got to qualify with them, you got to qualify with the bank, you got to qualify with both, which makes them harder to be able to get. With these micro loans, you don't have to qualify with the bank, so it makes them a lot easier to get. Okay, so Jeffrey says, I just became a franchise partner with a national restaurant brand and had to start an S-Corp. Can I use the past financials from the business to help build business credit? Yeah, absolutely you can. Remember, for real business credit, you don't need the financials anyways. Okay, but you absolutely can use the existing financials. As a matter of fact, you brought up a very good point. Guys, a lot of people use the business's financial or a business's assets to purchase the business. Okay, let me give you some insight. The number one way people buy businesses is by getting an SBA loan on the business using the current business's account receivables to do so. And I'm telling you this because it might be easier for you to buy an existing business and start a new one if you're in that stage. You could do so using the existing business's assets to do so. It's the number one way that people use SBA loans to buy existing businesses. So that's a great question. Yes, it definitely happens. Okay, for 504, is credit requirement stringent? It's exactly the same. So for 504, for 7A, for everything I told you, it's the same thing. They're not going to want to see major derogs on personal credit. They're going to need to see established business credit. Those two things are necessary for you to have a FICO SBSS score that's high enough to get approved. So, do a quick recap here. Okay, SBA loans, they're awesome because they give you long terms. They give you lower rates and long terms of like 10 to 30 years, so it keeps your payments super, super, super low. But there's some things you gotta have here. You need to have a FICO SBSS score of 140 or higher for banks to even submit the application, even though SBA's cutoff is 160. In order to get this score, you have to have established business credit, and you have to have pretty decent personal credit as well. They're gonna care about credit. Also remember with SBA, they care about collateral as well. You're gonna need collateral to offset the debt. Usually it can be something as much as account receivables. And also don't forget, you're gonna need cash flow, okay? They're gonna wanna look at some things here like articles of incorporation, balance sheet, income statements, tax returns. They're looking for a business that's growing in revenues and profits. They're going to look at your bank account statements for exactly the same thing. What kind of loan do you get? 7A if you want the money for general purposes. If you want the money for real estate or equipment, sometimes inventory, 504 is what you're going to go with. If you're a really good qualified borrower, you might have a choice on SBA Express, although these things are really going out the door from what we're seeing. And cap lines or credit lines, these can work really well for people in particular industries such as seasonal businesses, contractors, and builders, and people that are accepting payments from their customers on terms. And let's not forget about microloans. These actually are coming from really SBA sources, not banks. So that means you don't have to go through the double qualification process, which is perfect if you're looking for money under 50 grand, somewhere around 35. The average approvals on these guys are about 13 grand. So that's about what you need to know about SBA loans. You know what a 7A is, general purpose, 504, real estate, microloans, SBA Express. We know the loan. We have an idea of the kind of interest rates that you're dealing with here as well. So we're able to come in and get you the kind of interest rates that you're looking for. And most importantly, you're getting the long term, which keeps your payments low. These aren't the beast. They're not really as hard as you may think to qualify or take as long if you have the cash flow, the credit or collateral. If so, the terms are amazing and you get really good money at really good terms. If you're interested in getting financing, go to creditsuite.com/get funding. We have all kinds of loans and credit lines that are way easier to qualify for this one. Matter of fact, you want an easy to qualify for a credit line? Go to creditsuite.com/fundbox. Fundbox. Love that credit line. We get this for all of our clients, and this is something you can easily get up to 30 grand fairly easy, depending on how much revenue you have. We have a $100,000 credit line with them we absolutely love, so check that out. And remember, to qualify for all financing in one place, go to creditsuite.com/get funding, and we can definitely do that with you. Okay, no other questions. And Brian says, sorry, may have missed how to get SBSS scores. SBSS scores come from FICO. It's the only business score you see from FICO. It takes data from your business reports and your personal reports, populates it into one, and gives you a score. It's primarily driven based on your business credit reports and scores from Dun & Bradstreet first, Experian second, Equifax third. Not always the case. The lender can adjust how the scores prioritize. That's typically how it's done. Then they go into your personal credit first. So if you've done a good job establishing business credit, even with personal credit issues, you can still have the SBSS score that's high enough. Brian, hopefully that helps you. Michael says business credit, no Paydex, Experian, according to NAV, is B, Equifax unknown, but reporting I'm in tier 1 and 2. Okay, sounds pretty good. Don't hear a question there, so that sounds pretty good. Mark says the 3 C's, which are cash flow, credit, collateral. And then you're saying, is that better to get credit cards for seed capital? I don't know. What you just described is what's going on with your business credit scores. Seed capital will not use your business credit scores. They're going to use your consumer credit scores. So what you just described won't have anything to do with it, because seed capital is using personally guaranteed business credit credit cards. The time where your business credit will matter is to get the no PG business credit cards. Guys, for more information on business credit building, go to creditsuite.com/EIN. That guide's been downloaded well over 1 million times. It's the best blueprint guide that maps out all these steps for you to build business credit. And Michael says business instead of personal. The problem is the seed capital will not approve you based on business. They're only PG cards with personal credit based, not business credit. And Michael says, I tried to get Fundbox. They said they don't have it yet there. It could be. They're only in certain states, but I think they're just now about to hit all 50 states. So get in touch with our team. We may be able to help you with that. And don't forget, if you have any questions along the way, just give us a ring. Credit 877-600-2487, 877-600-2487. At Credit Suite, we help you get capital by helping improve your fundability, okay, by helping you become more fundable, by teaching you the stuff the banks don't want you to know to get approved, to also building your business credit for your EIN that's not linked to your personal social, and we help you with all types of capital, including loans and credit lines. So if we can help you, give us a ring, 877-600-2487, info@creditsuite.com. Thanks for the likes. Thanks for the loves. Thank you very much for the shares. Thanks for the comments, the questions. It's been a lot of fun. I will be back here next Wednesday at 4 o'clock Eastern. And what we do is all these are wiped out. All this goes away. Okay, these are our last 4 weeks worth of topics. We all new chalkboards and 4 new topics. Next month, I have 2 topics on getting financing for your business. We're going to be talking a little bit more about business credit, some other things as well. So make sure you get with us on Facebook, facebook.com/Credit Suite. Go into Messenger, type in EIN. We'll get you a free guide on building business credit, and then we'll notify you once a month or once a week whenever we go live here on Facebook. So I look forward to seeing you all next Wednesday at 4 o'clock Eastern. Thanks for the likes. Thanks for the loves. Thank you very much for the shares. I really appreciate it. Thanks for the comments and the engagements to talk back and forth is what makes this fun. GF says, how can we get the steps on the board? Simple. The steps are actually, there are no steps with SBA. We walk through this. But if you look at any of our Facebook, if you go to facebook.com/Credit Suite, you can access our videos where we go through these boards, but we don't typically take the boards and put them into a Word document format if that's what you're talking about. Okay. So we can join on Facebook. You absolutely can join on Facebook. If you go to facebook.com/Credit Suite, into Messenger, type in EIN, you'll get our guide, and we'll even notify you when we go live every Wednesday at 4 o'clock Eastern. So I'm going to go ahead and wrap up. Thank you all very much for tuning in. I will see you next Wednesday at 4 o'clock Eastern here on Facebook. Thanks, everybody. Have a great day.